Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top things that are currently moving the markets, with a key focus on last night's Nvidia earnings, the US GDP data that we're expecting later in the day, and of course the impact of tariffs on global markets and the newest ruling in the House. So once we go through this, we'll also be doing some technical analysis, try to understand where various asset classes are trading at right now, with a key focus on the major currency pairs. We'll be looking at stock market indices, commodities such as gold and oil, and once we are done, hopefully everyone will trade from an informed perspective. So as always, this session does not constitute any investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's get things started. You can see people have already joined. Hello, Paul Kerry, and shout out for being the first to join and comment. You can see Robert Cavalli, Henry Ayako, good morning, Rachel Kamau, Rono Hirari, Lona, hello and good morning. So let's get things started. So the first key highlight this morning is that oil prices have climbed $1 as US court blocks Trump's tariffs. This is the key big news in the market, and it's causing a lot of momentum. So oil gains around $1 after US blocks Trump's tariffs. At the same time, OPEC Plus could hike oil output for July, says sources and analysts. And US crude stocks fell last week, says sources citing API data. So oil prices rose by about $1 a barrel on Thursday after a US court blocked most of President Donald Trump's tariffs. The market was watching out for potential new US sanctions curbing Russian crude flows, and an OPEC Plus decision on hiking output in July. Brent crude futures climbed by $1.03 or 1.6% to 65.93 a barrel, while the West Texas Intermediate, or what we call US oil, advanced by 1.06 or 1.7% to $62.9 per barrel. So a US trade court on Wednesday ruled that Trump overstepped his authority by imposing across-the-board duties on imports from US trading partners. The court was not asked to address some industry-specific tariffs Trump had issued on automobiles, steel, and aluminum using a different statute. The ruling buoyed risk appetite across global markets, which have been on edge about the impact of the levies on economic growth, but analysts said the relief may only be temporary given the Trump administration has said that it will appeal. But for now, investors get a breather from the economic uncertainty they love to loathe, said Matt Simpson, an analyst at City Index in Brisbane. So on the oil supply front, there are concerns about potential new sanctions on Russian crude. At the same time, the OPEC Plus countries could agree on Saturday to accelerate oil production hikes in July. We are assuming the group will agree on another large supply increase of 411,000 barrels per day. We expect similar increases through until the end of the third quarter as the group increases its focus on defending market share. Adding to supply risks, Chevron has terminated its oil production and a number of other activities in Venezuela after its key license was revoked by the Trump administration in March. Venezuela in April cancelled cargoes scheduled to Chevron, citing payment uncertainties related to US sanctions. Chevron was exporting 290,000 barrels per day to Venezuelan oil, or over a third of the country's total before that. From May, though, through August, the data points to a constructive bullish bias with liquids demand set to outpace supply. Later on Thursday, investors will be watching for the weekly reports from the American Petroleum Institute, API, and the Energy Information Administration, EIA, the statistical arm of the US Department of Energy. According to the market sources familiar with the API data, US crude and gasoline stocks fell last week, while distillate inventories rose. Meanwhile, a wildfire in the Canadian province of Alberta has prompted the temporary shutdown of some oil and gas production which could reduce supply and force residents of a small town to evacuate. So clearly, we have quite a strong case for bullishness in oil prices, and this could be the order of the week as we progress towards the last day of the week, marked by public holidays happening across board. Speaking of holidays, we know that on Monday we had major holiday in the US, which was a celebration of Memorial Day. And now today we are looking at a very slow markets in the EU, with a key focus on the Ascension Day being celebrated across Europe. So we expect the market in Switzerland to be closed for the Ascension Day, France as well as Germany, which basically extends to the Eurozone. So in this case, we're expecting very slow markets in the Eurozone as they celebrate the Ascension Day. So this is basically celebrating the day that Jesus has ascended to heaven. So with that in mind, there's still more activity expected from the US side of the market, with a preliminary GDP quarter-over-quarter data expected at 3:30 p.m., which will be the main mover in the market today. So this basically measures the annualized change in the value of all goods and services produced by the economy. And of course, if it's greater than forecast, it's usually good for the currency or good for the dollar. So this basically means when you look at the last reading, which basically showed that the US economy contracted by 0.3% in the first quarter of this year, if you get a different number or a number that is bigger than this, then that would likely be positive for the dollar. However, if it worsens, then it could be negative for the dollar. So that's the key data to be watching this afternoon. So the projection or the preliminary estimate for GDP in the second quarter is expected to be the same as the prior one at negative 0.3%. So if we happen to see a better number, let's say negative 0.2, negative 0.1, or even 0%, that would be positive for the dollar. And of course, if it worsens towards negative 0.4 and so on, that would be negative for the dollar. So outside of that, we'll also be looking at the unemployment claims data. This is a measure of the number of people who claimed for unemployment insurance in the last week. So as you can see, the data hasn't been that much variable, meaning that we have been getting consistent numbers with different variability. And of course, notice how we have been averaging around 220 for the better part of the last year. So clearly, if we get a spike in unemployment claims, that would be quite worrying for the Fed, and the Fed would consider holding rates higher for longer. In that case, it would tend to be positive for the dollar. On the other hand, if unemployment claims are reduced, let's say from the prior reading of 227K, and we see a much lower number, let's say 220 or below, then in that case, we could be seeing the dollar weakening as a result. So we'll also be getting natural gas storage data. This will be at 5:30 p.m. as well as crude oil inventories. And as per the estimates, crude oil inventories may have reduced, basically showing that there is more scarcity of oil, and this is positive news for oil prices. So the data hasn't been released yet, but then if we happen to see crude oil inventories reducing from 1.3 m to 0.3 m, then that would likely mean higher oil prices. And of course, if it's even much lower, then that would trigger a rally in oil prices. So later on in the day, at around 10 p.m., Bank of England Governor Bailey will be speaking, and he'll be speaking at the Irish Association of Investment Managers dinner in Dublin. Of course, we'll be expecting audience questions. So in this case, we could be having a big mover for the GBP as of 10 p.m. tonight. So outside of this, we know that last night we had quite a big data point, and this was the FOMC meeting minutes. So the FOMC meeting minutes, which are released 3 weeks after the federal rate has been announced or after the Fed meeting, they tend to be big movers in the market. However, when the last Fed meeting happened, and this was some time back, or basically about 3 weeks ago, the Fed decided to hold interest rates steady at between 4.25% and 4.50%. So there was still a lot of uncertainties because Trump had implemented tariffs, but then a few days later, Trump suspended tariffs for 90 days. So as of the discussion of the Fed meeting in the prior reading, a lot of Fed members were still in the dark, and so much has happened in the US economy since then, with even inflation data showing confidence of moving towards the 2.0% target. So as a result, the Fed meeting minutes did not have much of an impact in the markets. So mainly because there was new data that had already presented itself in the markets, solving a lot of uncertainties that were presented in the minutes. So that's it from the economic calendar side. And now we move to the big news that happened last night. And this is Nvidia's earnings. So Nvidia is one of the biggest companies in the world, and of course, one of the biggest companies in the United States of America. So currently, the company is valued at around $3.29 trillion. So as of yesterday, notice that it traded downwards. It ended the day down 0.51%. But then the earnings were reported after market close. So in after hours trading, the company gained by 5.42%. So the closing price as of last night was $134.81. But then the opening price as of this afternoon will be expected to be $142.11, meaning that we're expecting a gap to the upside as investors become more confident of the stock. So year to date, the company is still recovering. It's still down negative 2.53%. But now, given the earnings that we have seen, a good chance that the stock now moves on the green side and starts making gains. So what was reported on the earnings? Nvidia announces financial results for the first quarter fiscal 2026. So what we saw was that revenue of 44.1 billion was up 12% from the last quarter, or from quarter four of last year, and up 69% from a year ago. So this was a big performance. If you look at the performance of the first quarter of this year, compare this to the first quarter of last year, then the difference is that the revenue was up 69%. So if you compare with the last quarter of last year, that is basically October to December, then it was up 12%. So this is still a big performance, given the uncertainties that were there in Q1 following Trump's tariffs, bans on China, and many other regulations from Biden. So data center revenues were at 39.1 billion, which was up 10% from the last quarter and up 73% from a year ago. So the company continues outperforming, basically building confidence with investors. So today reported revenue for the first quarter ended April 27, 2025 of 44.1 billion, up 12% from the previous year and 69% from a year ago. So Nvidia was informed by the US government in April that the license is required for exports of its H20 products into the China market. As a result of these new requirements, Nvidia incurred a 4.5 billion charge in the first quarter of fiscal 2026 associated with the H20 excess inventory and purchase obligations as the demand for H20 diminished. Sales of H20 products were 4.6 billion for the first quarter of fiscal 2026 prior to the new report licensing requirements. Nvidia was unable to ship an additional $2.5 billion worth of H20 revenue in the first quarter. For the quarter, GAAP and non-GAAP gross margins were 60.5% and 61% respectively, excluding 4.5 billion charge. First quarter non-GAAP gross margin would have been 71.3%. So despite facing such a huge charge as a result of the cancelled contracts with China, the company still managed to make a huge profit and basically beat expectations in the market. So for the quarter, GAAP and non-GAAP earnings per diluted share were 0.76 and $0.81 respectively, excluding the 4.5 billion charge and related tax impact. So first quarter non-GAAP diluted earnings per share would have been $0.96. So our breakthrough Blackwell NVL72 AI supercomputer, a thinking machine designed for reasoning, is now in full-scale production across system makers and cloud service providers, said Jensen Huang, founder and CEO of Nvidia. Global demand for Nvidia's AI infrastructure is incredibly strong. AI interference token generation has surged tenfold in just 1 year. And as AI agents become mainstream, the demand for AI computing will accelerate. Countries around the world are recognizing AI as essential infrastructure, just like electricity and the internet, and Nvidia stands at the center of this profound transformation. Nvidia will pay its next quarterly cash dividend of $0.01 per share on July 3, 2025 to all shareholders of record on June 11, 2025. So clearly, it was more of a big highlight performance. Of course, we expect the stock market to be responding positively as the market opens later this afternoon. So outside of that, trying to see what else we may have missed as a market update for this morning. So US Trade Court blocks terms tariffs. So we have already seen this. So global stocks, the dollar and bonds, bond yields rose, while gold declined after a federal court ruled that President Donald Trump overstepped his authority in imposing reciprocal tariffs. A three-judge panel on the U.S. Court of International Trade declared the tariffs unlawful to all and ordered them to be vacated and permanently blocked. The White House is expected to appeal the decision. So other key highlights as of this morning, Spain retail sales growth at 4-month high. Japan consumer sentiment rises from over 2-year low. Fed to await greater clarity on economic outlook. Australia private capex or capital expenditure unexpectedly falls in Q1. New Zealand business sentiment slips to 10-month low, and South Korea cuts rates, lowers GDP forecast. So those are some of the key highlights as of this morning. And if you look at the commodity side, I believe the biggest mover as of this morning is crude oil, which is up 1.46%. So Brent is also doing well, 1.27%. So net positive day for oil. So on the indices side, which is a highlight of the performance of the various stock market indices around the world, they are mainly in the positive, with the key leader being the US 100 or the Nasdaq, which is up to 1.12%. So the Dow Jones is up 1.29%, and the US 500 or the SP 500 is up 1.66%. So Asian counterparts are also doing well, with Japanese Nikkei 225 index being 1.45% up. Also, if you look at the Shanghai index, it's up 0.75%. The Sensex index is up 0.03%. And when you look at the European counterparts, they are not doing so well, with the UK 100 or the FTSE 100 being down 0.1%. But the rest are also doing well. German DAX 0.42%. The France 40 index 0.52%. Italy 40 0.06%, and the Spanish IBEX 0.23% gain. So clearly, it's quite a net positive day across the markets, with the US indices being the key leaders in the current rally. So I'm still checking to see if there is any other highlights. So from Yahoo Finance, I believe the biggest news key highlight is Trump's tariffs in limbo after trade court signing rebuke. Another key development is that Elon Musk confirmed driving government role as Doge efforts fizzle. So now he's fully focused on Tesla and other companies, and he's out of government. So this has been a key concern, especially for Tesla investors. So Elon Musk also said that Tesla is testing the self-driving Model Y cars for June delivery. So this is a big news for Tesla investors. Chevron to cut nearly 800 jobs in Permian Basin. We have already seen the mention of Chevron getting its license suspended. So in this case, it may have to suspend quite a good number of jobs. So Bitcoin ETFs pull in 9 billion as investors ditch gold holdings. So there's some form of rotation happening between gold and Bitcoin, with more investors preferring to hold on to Bitcoin other than gold. Of course, Bitcoin Las Vegas annual conference is still ongoing. Today is the second day. So Google begins direct online sales of Pixel phones in India. Oil crimes on risk mode as a trade court blocks Trump's tariffs. So China's DeepSeek releases updates to AI model that sent US shares tumbling earlier this year. Then don't see if there's any other key highlight. The rest is mostly a repetition of what we already covered. So also we had some other earnings from Salesforce, which were better than feared. I need to see the full text here. So Salesforce or CRM, which is a company that provides sales software across the world, one of the best in the world. The stock is popping in extended trading after the company reported strong first quarter results, had better than expected sales, and lifted its full year outlook. So RBC Capital Markets Software equity analyst Rishi Jaruria joins market domination with Heidi Hyman and Josh Lipton share his instant reaction to the earnings print. So the video transcript here is pretty detailed. So I'm just trying to look at the key highlight here. So Salesforce is acquiring Informatica for about 8 billion. In your opinion, Rishi, what's a smart move by Mr. Benioff strategically and financially? I'm a little bit skeptical on it. I wrote about this publicly. I think there's a couple of concerns I have. Number one is, Informatica has gone through a little bit of a rough patch on their own, and now they're getting it at a cheaper price. But it also feels like a different financial profile than what they were talking about a year ago. So clearly, with Salesforce beating both earnings and revenues, and also making an announcement that it's acquiring Informatica for $8 billion, then there should be something likely positive in the market today. So if we look at CRM stock and the way it has performed this year, year to date is still in the negative. It's down 16.52%. Of course, yesterday it closed down 0.42%, but then in pre-market trading, it managed to make a rally of 1.98%. So good chance we might be seeing quite some good positive performance as the market opens later today. So that being said, I believe it's time we jump straight into some technical analysis and try to understand where the markets might be headed next. So I'm trying to get a bigger screen here, checking on the comment section for any questions you may have. Good question here. Talk about Nvidia. I think we already covered significant info on Nvidia. So what we are looking at right now here is the chart of Nvidia. So as of the closing in the markets as of yesterday, it was at 141.58. Of course, we expect an even bigger print later on as the market opens. So clearly, it's one stock that has been extremely volatile, but at the same time making good returns for the investors for the last 3 years. So the last 3 years have been nothing less than exemplary. So from the daily time frame, notice that Nvidia had moved all the way down, I would say by about 43.54%. And since then, we have seen an reemergence of the stock. So after this big selling momentum, we have seen the stock come back and recover some of those losses. And now we are looking at a potentially new all-time high. So we can't zoom out because of the earlier last year's uh, last year stock split. So in this case, the targets for a new all-time high will be looking at values above $152 per share. So clearly, we expect this to be the current level of momentum for Nvidia. So outside of that, now focusing on the majors, we starting with the dollar index. So the dollar index has been on quite a negative path, basically going down for the better part of the last couple of weeks. But then in the last week, we have seen the dollar index make some recovery. Sorry, not in the last week, but this week. So with the strong momentum happening on Monday, Tuesday, and Wednesday, and now as we get into Thursday, we started with big momentum before erasing some of the gains, but the dollar seems pretty strong. So seeing this happening across board, yesterday we saw the pound continuing to lose against the dollar. So today we had some relief early in the morning. Notice how the pound attempted to regain some momentum against the dollar, but now we are facing some form of resistance here, and the trend is continuing. In this case, the dollar regaining some of the strength it had lost. So in this case, I would be more confident with the dollar continuing to gain for the better part of the session. So notice how we started with a strong momentum down here, with the dollar gaining some strength, then erased some of the losses, gains, and now we are seeing the dollar attempting to do the same thing it did in the morning. So this could be an interesting play as of this morning. So for Euro USD, we were basically on this channel, so we would say it's safe to assume this was an overall trend in Euro USD. So the euro dollar was gaining, but then the highs compared to the prior highs are seemingly getting lower. The lows are getting lower. So if we were to do some trend line on the H4, I would say we would do this and we would do this, and then it would be safe to assume that this market is now bearish. So in the short run, we had this channel where the market was just oscillating up and down. And then this morning, it managed to break to the lower side. And now we are looking at a potential retest. So after the big break, market goes back to the breaking point. And now a retest is in play, which means that we are likely to see the market pushing further back downwards as the dollar continues with its recovery. So a recovering dollar can be seen across board. In this case, an Australian dollar that attempted to go up this morning is also facing strong resistance. So notice what we are seeing here. And now the market is seemingly changing direction. So perhaps even going towards the day's low. So far, the momentum was pretty strong early in the morning, but it seems like the markets are reversing, with the most impact being felt in USD JPY. The dollar had made a very strong 3-day rally, but now we are seeing the Japanese yen regaining momentum and erasing some of the earlier losses. So in this case, we are seeing the US dollar reversing, and we could be seeing this extending perhaps by tomorrow all the way down to Wednesday's low around 143.982. So gold, on the other hand, faced a very strong resistance here towards the end of the week last week. And since then, gold has been losing momentum. Today's in the morning, there was a big drop to a key level of liquidity around 32.49. So after that, we saw a strong bounce. But then after retesting these areas here, and this is somewhere around Tuesday, Wednesday's lows. So Tuesday's low, Wednesday low, market retests here, finds resistance, and now we are looking at another potential drop. So I believe this could be our chart of the day if confirmed and we see more evidence of sellers coming into the market. So oil prices, after making a very strong rally, we have met major resistance area here. And even after getting into that resistance area, you will notice how the market is currently making a very strong sell. So having opened with a gap, the open of the markets today, it seems more likely that oil will be crossing this gap today, and now it's going for it So good chance that we see 64.348 before the bullish momentum continues. So remember, we have a very strong bullish momentum in the market. So the last couple of times we have had a gap in the market. We have seen the market come straight for it. So in this case, the market went straight and closed the gap. And also we had yet another gap here. And the market went straight and closed the gap. So it's also within reason to expect that the market will be crossing this gap today. So also could be one of the candidates for chart of the day today, with the oil prices having dropped sharply from a key level resistance area. So US equity indices, the Dow Jones made a very strong rally this morning. Right now, it's seemingly pulling back. But then if you consider that we are still on a recovery path, so after the big sell-off here, we saw the market recovering again. So there's a good chance that this is only temporary and the market will continue pushing higher. So perhaps it's just a small pullback and eventually we see the market pushing further upwards. So the reason I'm extending this particular line here is because of the high that we experienced as of yesterday. So perhaps the market could be going for yesterday's high and then continue with the push or with the momentum upwards. So currently the market seems pretty bullish to me. So we saw this happening with the Nasdaq. And now that one of the biggest components in the Nasdaq, Nvidia reported some really positive earnings. Also CRM or Salesforce made some really positive earnings last night. A good chance that these indices will be continuing with the bullish momentum later today. And looking at the size of the candlesticks on the 4-hour chart, this does not usher in confidence that the sellers are coming in. So more likely that the market will be pushing higher. So we'll be watching this closely. And of course, for the SP 500, we are also seeing the same thing. So very strong recovery, pullback, and continuation. Today is still a positive day. So despite the small momentum we are seeing here, which is seemingly red, the better part of the day is bullish. So good chance that we see a continuation of the same. So we should be watching for some form of a pullback here. Perhaps a manipulation here attempting to move lower, and then eventually continuation of the bullish momentum. So this might be an interesting play later in the day, especially if it was to happen during the New York session. So Bitcoin managed to form a new all-time high. This played out around $111,000 per Bitcoin before pulling all the way back down. And now we are seeing a very strong bounce from a key level support that has played quite a good number of times. So I would say this level has been pretty significant. $106,900 per Bitcoin. And now we are seeing the strong bounce playing out. So good chance that we get back to 110,000 price action level. So New Zealand USD making a very strong bounce from the lower trend line. So also this is indicating chances of the market getting back to prior highs. So on the 1-hour chart, there's still more resistance around these areas here. And I'm talking about yesterday's high, though the bounce was pretty strong with 2 green candlesticks indicating that bulls are in control. Then you go to European equity indices, and then you see the kind of carnage that is happening right now. So despite the strong bullish momentum early in the morning, we are seeing a very strong reversal playing out on the hour. And this could mean that if the strong jump in the morning wasn't justified, then the market could be looking to erase all the gains. So it's happening for the German stock market index. All the gains early in the morning have already been erased. For the Spanish stock market index, all the gains in the morning have been erased. And for the France 40, all the gains and the jump in the morning have not yet been erased. And now we are looking at the market eventually closing this gap. So lastly, for the dollar trading against the Canadian dollar, we saw a very strong rally this week. And now we are getting to this level where the dollar seems to be weakening after getting to that level. So good chance that we see some form of reversal playing out here, with the dollar giving some of the gains back. So clearly, yes, it's a tricky situation. If you go to a smaller time frame, you'll notice that the market is beginning to form some form of consolidation. So here, I would be more interested if the market was to get out of this zone. So far, the day's range, the high and the low, has already been formed. So we could be seeing the market playing within this range, and perhaps uh, the market maintaining this range of 1.38604 and 1.38165 up until we get the crude oil inventories data in the afternoon, and that's happening later today. So outside of that, I'd like to thank everyone for joining. Uh, so good question here. I tried going through your tutorial and I didn't see anywhere about the type of traders and their risk. So there's no such thing as type of traders. It's you who decides how you approach the markets. So under strategy, this is where we cover the type of trader you want to be. So in terms of strategy, is whether you are looking for quick short gains, or whether you're looking to hold your trades for longer, whether you're looking for trending markets, ranging markets, and so on. So it's more about the strategy you are implementing in the market rather than you giving yourself a classification. Remember, the whole idea is to hold on to winners and to cut your losers short. So, and we also had an entire session on risk management. I don't know if you covered that. Kindly check. Good question. What's the correlation between USD CAD and US oil, and how do you determine these trades respectively? So most of the time we have had a very strong positive correlation between the Canadian oil and US oil. Sorry, between the Canadian dollar and US oil. So whenever the Canadian dollar would be strengthening, US oil would also be strengthening. And if the Canadian dollar was weakening, the US oil would also be weakening. However, which one moves the other? So the Canadian dollar is a currency that operates in the Canadian economy and is controlled by the Central Bank of Canada. However, the strength of the Canadian economy basically is heavily dependent on oil prices. So Canada being a major exporter of oil, if oil prices go up or down, then that impacts their currency. And it's not just Canada. We also have other economies like Nigeria, whose budget depends on the price of oil. So if the price of oil largely depreciates across global markets, then the Nigerian naira also tends to weaken. So that's the kind of relationship we tend to see between oil prices and the Canadian dollar. However, as I always say, correlations are not permanent. Sometimes they are broken. So it's not always that the correlations will be 100% when this happens, this other one happens. So sometimes it's good to test whether the correlation is strong and whether the correlation is weak. So sometimes the correlation will be very strong, sometimes it will be very weak, depending on where the investors are focusing on. So, for instance, when Trump implemented tariffs on Canada, that was not basically impacting oil directly, but it was impacting Canada directly. So the correlations between oil and the Canadian dollar are broken because investors were focusing on the tariffs and the impacts of the tariffs on Canada. So good morning, Manzi FX. So good question here. Though the trade court dealt Trump a blow in tariffs, he still can use other powers to keep them. We should be expecting him to respond later on. How do you think his statement will affect the market after he speaks? So Trump has been largely fighting the Democrats. And the Democrats, since they were defeated in the last elections, they have been using the courts to frustrate his objectives. So the courts have been the go-to approach for Democrats. So the last time he was facing the courts, he accused them of holding more power than the government, the elected government, and implementing a coup. So in this case, given his political investment in tariffs and some of the wins he was beginning to claim, I expect that he will be giving a very strong worded message to the courts. And of course, an official appeal will most likely be presented today. So some of the main activities in the stock market that we have seen could be reversed as soon as Trump makes his announcement today. So if Trump decides to go like all out against the courts and implement an appeal and maybe hire a couple of guys or a team to make sure that this doesn't happen again, then good chance that any gains we have seen in oil, any gains we have seen in the stock market could be reversed as well in a very short period of time. So that is something we have to consider going forward. And thank you, Gary Patrick, for raising that point. So what's the main difference between Dow futures, Nasdaq futures, and US 30 futures? So the Dow Jones, or what we call the US 30, is a stock market index that measures the US industrial sector. The Nasdaq is a stock market index representing the Nasdaq exchange, which was the first exchange in the US to go completely online. But then when we say Nasdaq 100, it basically represents the top 100 companies, tech companies in the US, top 100 tech companies in the US. And then the SP 500 basically measures or estimates the performance of the top 500 companies in the US, or more specifically 503 companies in the US, which is basically a benchmark for measuring the performance of the US economy. So the three top indices tend to move with a strong correlation, but then depends on the market cycle. When investors are, let's say, risk on, they tend to go for more tech stocks because they have higher returns, but also higher risk. And of course, when the markets are risk off, you tend to see more investors going for the Dow Jones stocks because they are a bit slow, but then stable, and they represent the American industrial sector. So that's the main difference. And of course, you can always dig. You can always Google or use ChatGPT to check out the constituents. If it's US 30, which are these companies that are represented? If it's Nasdaq 100, which are these 100 companies in the Nasdaq? If it's the SP 500, which are these 500 companies in the SP 500? And also you can go further and check out the weights, because different companies in the indices have different weights. I don't know why I keep getting these questions about how do we call this ICT concepts. How important do you think order blocks and FVGs are in considering the movement of price? They are regarded as price magnets. What guides you in thinking of one good as being better than the other? So honestly, I do not use the ICT concepts. I feel like there is not something new. They are completely repackaged, and no matter what they tell you, it's always the same things we have covered since decades ago. Nothing new in ICT. So they will always revolve around the same concepts that we keep covering every now and then. So for instance, you look at this low that we had here yesterday in the morning in USD CAD, the low we had in the New York session, and you see the market coming right back to the same area. So whether you give this area a name or you try to label it, the idea or the key concept is the same, is that the market felt the need to come back to the same area, the retest, and then what we are seeing here is a bounce. So whether you call that a name or not, I don't know how to explain it. So so when you talk about FVG, I believe that should be fair value gaps. It just happens over and over again that the markets will be psychological and they will retest previous highs and lows. And in that case, whenever there is a big shift in momentum, the market will tend to cover that. So sometimes it's more like a gap. I don't know how to explain it. Let me give you an example here. Yeah. So this big momentum, low volume at market open, it's not a gap. Yes, you have a candlestick, but it's almost more like a gap. And now what we are seeing here is the market going back straight and covering the same area. In this case, price reverting back to mean on realizing that the news was unfounded or could be easily reversed by Trump. So it's the same case that played out here. Notice here how there was a big sell-off, and then immediately on the market realizing that this was a bluff, we saw the market getting back to the same original point, or basically a reversion back to mean. So that's it for the day. Thank you, everyone. Brent oil had a gap, but WTI didn't. Have they diverged? No, it's not a diverging. It's more of the liquidity at market open. So in this case, the correlation is still very much intact. So you look at US oil and you look at H1. So we had the same exact kind of movement. It's only that we don't have the candlesticks on WTI, but then you are also seeing the same concept. Market gets to the resistance and then immediately starts dropping. So if you look at Brent oil, it's the same thing, only that this one comes with a gap. So a gap is basically a market trading on low volume. So you see a big jump, but still the same idea or the same concept. So thank you very much. Thank you for your time. We already covered BTC. For the person asking about BTC, we are seeing some strong bullish momentum, and of course, bounce from 106.9. We are headed back to around 111,000. So last but not least, if you don't have a trading account, make sure to check out the links in the description below. Register for a trading account. Of course, we have released quite a number of episodes since the last time I had a session with you guys. So we did Kenya Market Insights, Trump 2.0, and navigating to 25 volatility with Robert. So this was the first episode in Bullish Banter featuring Robert Mbogo as well as Jesse back on the mic. And now we have Prudence featuring Octavian Kamala, which we released 5 days ago. So make sure to check out the episode. And if you are looking to learn how to trade, check out the Novice to Pro series available on FXPesa YouTube. And of course, we still have ongoing Zoom classes available from Monday to Friday. The links are on our social media handles. Just go to FXPesa handles and then click on a link in bio and get a link or access to the Zoom classes. And they are all free of charge. Make sure to join us and learn more about trading. Keep it here, keep it at Market Snapshots every day, Monday to Friday at exactly 11 a.m. So enjoy your day, and I hope you have a profitable week.